Hi and welcome to a Roaring podcast where we interview interesting guests talking about innovation, data, product development, and tech. Stay tuned and get some new insights. My name is Pontus Holmberg and I'm your host. In today's episode of a Roaring podcast, we will meet Hannes Helander, who is head of startup program at Connect Sweden. We will talk about what is innovation and how do you go from a great idea to get that investment. Stay tuned. Hi folks, welcome to a Roaring podcast with me, Pontus Holmberg. I'm super excited today to introduce my old colleague and friend, but most important, head of startup program at Connect. Welcome, Hannes.
Thank you, Pontus. It's really exciting to be here. And also to have a opportunity to talk with you over these topics over the next, half an hour.
Yes, happy that you are here. So your title, Head of Startup Program, maybe it's self-explanatory, but could you just elaborate? What do you do then as a Head of Startup Program, and what do Connect do?
Well, Connect in itself is a nationwide, actually non-profit organization. So we're working, the core of what we're doing is to support and help entrepreneurs and startup and scale up companies to take their companies to the next level. And this could be getting the right investors on board or getting the right input and people on board to continue their growth journey. And what I'm doing, I'm in charge in the Eastern region here for all the work that we are doing with early stage startups. So that means meeting a lot of companies, figuring out which ones work for us and for which we are a good fit.
You said that you're a non-profit organization. Can you? What does I obviously understand what it means, but how does that relate to the business or the service that you actually conduct at Connect? Because no one is paying you for your service, or do they? How do you get money to be funded as an organization?
Yeah, well, there are, as with many startups in this field, particularly, or in many nonprofits in this organizations, perhaps in this field, there are multiple revenue streams. But for sure, the companies that we are working with and the investors that we are organizing in our network are also financially compensating us for the services we're doing. But the non-profit part is more that we are not supposed to make a profit, but to reinvest everything that we are doing into the business so that we can help more companies.
I understand. And then is the follow-up question on that, do you as an organization take stake in the companies that you are supporting? Does that happen, or is it
No, that's one of our perhaps key differentiators towards a lot of other players in this field is that we are not taking a stake in the companies that we are working with, but we are facilitating the meetings between the entrepreneurs and the investors, for example.
So, does Connect have any particular sort of niche that you're focusing on, or do you support any startup company that you see have a fit or that has a potential to grow, or how does it work?
But basically, we support companies in all industries, so we're industry agnostic, is what I would say. But of course, since the companies are coming to us with the hopes of finding an investor, also in the investor network that we are managing, we typically look at two different criteria. Number one, do we think this company has a good potential to find a good match in our network? So that's number one. And secondly, also, do we think that the value we can provide to the company, will it be big enough or high enough, important enough for this company, regardless if they meet an investor or not?
Okay.
Because getting the actual end investor deal, that's sometimes very difficult. There's so many different factors. So we want to make sure that the entrepreneurs and startups feel that they have not wasted their time if they didn't catch an investor with us. They will still have learned some valuable stuff. So that's what we're trying to balance.
I understand. So yeah, with that said, I had another sort of not question, but a topic that I obviously would like to discuss with you, since this podcast is slightly oriented towards product development, innovation, tech. But I will sort of cherry pick your brain in terms of innovation, which often I think can be used as it's a buzzword. You put it in there, doesn't really means that it might be innovation. Me, for an example, I think I have the title product manager or product manager innovation, whatever. But I just want to cherry pick a little bit on that. What's your sort of take on that concept that innovation is now, it's a buzzword? Do you agree with that? Is that something that you see that a lot of people or companies are using? And also linking that to sort of your role, do you meet potential clients or startups or concepts or ideas where they think that they are innovative, but then when you look at it, you can, this is not innovation or this is not innovative?
I think you're definitely right there. There is innovation as a word has been a buzzword for quite some time, actually. I think when we met initially, that's more than 15 years ago, it was a buzzword then. It's still a buzzword, and it's unfortunately because innovation in itself is super important. I find it a pity that it has become such of a buzzword that it's used sometimes without anything backing it up. So I would say that it is a buzzword. You hear a lot of companies mentioning innovation. We do it ourselves. We're supposedly working with innovation-based and venture-backed companies. But if you unpack what is innovation, of course you will get to the root, and you will unfold the values that innovation gives, which is actually creating value. I think that's the most important part. Using new technologies, business models, or thoughts in various ways to create value where there was no value before, or increase the value that was there before.
I make a note on when you sort of described it as creating value, because sort of a follow-up question, or in my notes, I think this is my opinion only, but I think that often when you talk about innovation, you often tends to get back to the sort of technology advancement that innovation is, and it equals some kind of technology pioneering something within technology. If that's within the fintech industry, it might be some cleverness around a payment platform, and they've discovered some or developed something unique or new. So, but I think that I agree with you, and I like when you describe it as innovation. If I understand you correct, it might be technology oriented, but you also mentioned business models that can be innovation if you actually come up with a concept that potentially can change how you run your businesses, how you sell your product, etc. And then it just links back to that create value. So would you say that this vast concept of innovation, if it creates value, can it be then considered as innovation? It doesn't necessarily have to be inventing something, or it doesn't need to be code or programmatic stuff that you're putting into it. It can be.
It can be. I think most often it's a combination of various things. And we sometimes, or quite often, meet companies that have what I perhaps will call more an invention than an innovation.
Yeah.
And that's the okay. We've figured out this new cool technology, but to make that technology, which is great, which is of course, I mean, you need that too. But for the technology to create value, you need to add something more. Sometimes, if you're super lucky, you just plug it into your existing business, and it creates new value for someone, or it creates value for someone new. But quite often, you need to take different parts. Okay. We're tweaking our business model. We're adding a new customer group, for example, or doing something new to add to create. Because I think the important thing is that it should create new value, or value in a new way, or value for new clients or new customers or new users.
So I guess that when you at Connect sort of evaluate the potential startups or the companies that are a startup and want to scale up, when you are then sort of obviously that innovation part is an important part of your evaluation, I guess.
Yeah.
What would be the criteria, and if you just elaborate a little bit, how do you look at it then? If you take sort of a specific example, or in the way that your thought process
but of course it's very from case to case, but an interesting case I think, which a company that we worked with last year, still working with in various ways, it's called Din Psykolog. So it's in the group of like online psychology, you have Mindler. There are a couple of others in this playing field. And when I first met Ramsey of Din Psykolog this 1.5 years ago, so he described their service and said, okay, so we're starting like super low tech, so we're only using chat.
Yeah.
So it's only meetings with psychologists over chat.
No video at that.
No video.
Oh, okay.
No video. And what we together figured out, and what his data showed from those initial stages, that actually was a bit of an innovative, because they reached clients which they couldn't reach otherwise. New groups, perhaps you're a lot of people at home. You can't take a video call. You don't have a space for a video call. No. This was also during the pandemic. Everyone was home. Yeah. And perhaps this is sensitive.
Yeah, you don't want to.
But with a chat, you could actually sit with the rest of your family in the sofa, and you could chat with your psychologist. And I thought that was using an existing, no new technology, actually pretty old technology.
Yeah.
But it created value for a new type of customer.
Yeah. So that actually explains your sort of, which you said before, that innovation for you guys and at Connect, it's, does it create value? And this is a good example, because this is obviously, it was actually removing a technology part from the solution, or in the business model, or in the technology model, that they just removed the video sort of opportunity, and then it created value. And that's what you saw when that's a good example. But do they have video now, or are they still using?
They are working to add video.
Yeah.
Let's see what the final where the final product will end up. It's a journey, but I think it's an example of particularly finding new customers or new users in new fields, underserved customers, which I think is super important, and which most of the time actually requires some kind of innovation, and it's not always the tech innovation.
No,
that's needed. It could be something else.
Yeah,
figuring out the situation of the user and the requirements for how can we make this usable or feasible for other people.
But then I guess that this was a good example. They've joined your program. You see the potential in it. Obviously, not mentioning any names in this question that I would have that I would put, but I guess that there might be also interesting concepts and ideas that comes to you, but they are not fulfilling your requirements for working with them.
Mm-hmm.
But they can be they could be a good startup anyway. Do you have any where you say, okay, this is not for us, but they are still an interesting company, but they're obviously, we work with someone else to support them. But do you have some sort of examples of where when do you turn them down, basically?
Yeah. If they're an interesting company, we try to figure out a way to actually work with them. Either if we would turn them down, like completely say this is not for us, that's typically because we feel that they don't need our services, that we cannot provide any additional value. They might already have a strong investor network and investors coming in, and that they should focus, instead of working with us, they should focus on the job at hand. And then we will keep the relationship. Perhaps we will bring them into our network, and and have them in discussions with other startups which are facing the same kind of issues, or where they can provide something. So sometimes that happens. Otherwise, quite often it could be that they are too early in the phase.
Yeah.
Like, this seems super interesting, but you need to work a little bit more to get a little bit further until it's worthwhile for you to engage in a program like the one we are having.
Yeah, I guess a challenge would be that you said that they might be too early. Is that because that they just come with an idea, or what's your sort of take or requirement in what kind of level do you need to be at when approaching you? Do you need to be a company? Do you need to be a registered company? Do you need to have a prototype or a product, or do you need to have sales or so? Yeah, what kind of?
So first we have like some formal, like it should be a registered company, because otherwise it makes it difficult for us to work with them, and for investors to invest in them.
Yeah.
But apart from that, what we're looking at is we prefer to have a founder team, so at least 2 founders. I think this is super important, and you should have, well, depending a little bit on which kind of industry and which kind of product or service that you're providing, you can be earlier or you can be a little bit later. Let's say you're super research heavy. You're perhaps you're a little bit earlier in stage, because that journey is quite long. But if you're doing like an e-commerce play, you probably have customers and you perhaps have revenue up to a couple of millions too, because it's easy to start, and the journey looks different. But typically, very rarely just from idea stage, or actually never from idea stage. You should have at least validated your major assumptions, and you should have some kind of first version or MVP or prototype or pilot running, a little bit depending on which kind of industry, which kind of technology you're using.
Interesting. I remember when we worked together. This is a long time ago, but we were working in a small company called Agent 25, working with digital media monitoring services. At that time, the concept of Pontus, where do you work at? I didn't say I work in a startup. I said I'm working in a small company that been around for 2 or 3 years, working within digital media monitoring. I'm just curious on your take and your definition of what is a startup, and when does that sort of transform to be a scale up, and when would you consider it as a a normal mature company? What's those sort of steps? Is it if you're 5 people, then you're a startup, or if you're 24, then we would call you a scale up, or is it based on revenue, or is it any way that you actually can define it?
I wish there was a super easy definition that everyone would agree on. Unfortunately, it is not. But the way I think about it is, if you start from what's a small company and what's a startup, what's an SME? Because we have a lot of, in the statistics, startups are also in the kind of SME segments. But the more traditional SMEs, I would say those are more focused on organic growth, whereas startups, which is the very loosely defined, also small companies wanting to do something new. I think there is an element of some novelty, call it innovation, or call it something new within that they found, and they also have the ambition to grow very rapidly. I think that's in that initial stage, and this rapid growth, I think that's what's causing a lot of the challenges. Because how do you achieve it? How do we finance it? Do we need external capital? Most SMEs do not need external capital.
No.
The first focus is getting profitability, and getting like cash flow, so we can continue the business. Whereas for a startup, that financing journey might look completely different. So then, when you get to scale up, I would say you've had your startup, right? It's gone well. You've had your first customers. You can show that you have proven your business model. You're getting repeat customers, and you are starting to work in this way, we can easily get 1 more customer or 10 more customers through the same way, because we figured out the model. And I think in that case, you're starting to become a scale up. You're ready to scale. You have a model, or at least a model that's working. And if you pour in more resources into this model, you will get exponential growth on the other side. And that's when you're around that stage, is where you're a scale up. And that can happen pretty differently when it comes to company size or revenue size, depending a little bit on your market. Some technology sectors goes very, very quickly, and they can really scale very quickly, and they've figured out their business model. When in some other cases, it takes much longer.
Yeah. So if I understand it correct, a startup is something more than just a newly started company. It has some other content in it to be defined as a startup. One thing that I've noticed is that you're also, as a company or as a startup, you're often, or even bigger companies, they want to ride on that, the startup trend and that sort of ecosystem, because often when you meet customers or companies, they tend to also use, including startups, but they tend to use the concepts of, okay, what are you doing? We are operating within the fintech industry, and we are operating in the travel tech industry, and we are operating in the reg tech industry.
Sometimes we talk about like X tech, and replace X with whatever you're doing, whatever old industry that you're working in. Unfortunately, perhaps, I think these worlds, they will just become the new. We won't call it bank and finance sector anymore. We will start to, in a couple of years, everyone will be calling themselves fintech.
Yeah, exactly.
So it will just replace the old industry names. And of course, I think perhaps in the underlying is the digitalization of the society, because we have our existing industries and business models, and you're using some digital tech, hence the tech part, to enhance this, or to grow it, or to scale it, or to survive. So that's but I agree, a lot of people, and also for investors are, most of them are just normal people like you. And if we think it sounds cool with travel tech or fintech, they also think it sounds cool with all those words.
I think you're onto something, because in the future, then obviously you would then have ripped out the innovative part of, because if that's a way to just describe an industry, it means that if any bank would refer themselves, we are within the fintech area, it doesn't necessarily mean that they are.
But I feel pretty confident that the new generation of entrepreneurs that will start their companies in a couple of years, they will figure out a way to distinguish themselves from the new legacy companies. That will be, Klarna will be a legacy company, Spotify will be a legacy company in 10 years, and the ones doing the coolest things or the cutting edge technology, they will figure out a way to
and not refer them that. So they will not refer themselves in the future of being a fintech company, because that's been hijacked by companies that once were a true fintech company, challenging, then matured and became just an old legacy company. So what you're saying basically, I think, is there will be other concepts of describing companies that are challenging the status quo and are in the forefront of something. Let's see what those then.
Let's see what the future brings.
But just going back to the, I'm not meaning to speak badly about investors, but an interesting then is, so you said that they are normal people. Of course, they are normal people, but they start to look beyond the concept of fintech, because if that's sort of, what's the word, devaluated concept, that it doesn't really, it just becomes more of a buzzword. So I said that when using those words, it draw more attraction to our company or to our investor pitch. But will there be a point where those concepts and those way of describing a company when it doesn't have any value anymore?
I think that of course, I mean, of course, investors, there are very many different types of investors.
Yes.
You have venture capital companies where you might be talking to someone managing a fund or pool of money from other resources. You might be talking to a business angel who has gathered resources and are now personally into investing his or her own money, which are very different. But I would say most serious investors, at least the ones we meet, ones I meet in the network and in other places, they might get interested from the initial, like in the pitch. It's a fintech company. It's not the finance and banking services company. But the serious and good ones, they will want to know more about.
They see through that.
So they in the second meeting, that's okay. Fintech, this sounds interesting. I might take a second meeting. In the second meeting, they will want to know a little bit more about your business and how you're thinking. And but then again, also when it comes with the private investors or business angels, you have a lot of people. People have different experience levels.
Yes,
and some are new to the investment game and don't really know how to play it. Some are perhaps new to your industry, and some thinks it sounds cool. So there's a lot of a lot of different type of investors. I would say though, even though it might seem initially might seem great, this is an investor and we're labeling ourselves as fintech, and they're on the ball. They want to invest X amount of money in our company. That might be a good thing, but the investor who poses the most difficult questions or the most difficult person to get on board, that might be the better investor. Especially in the early stages, you need the investors who know what they're doing.
So then you would say that, at least from your horizon, that you need the funding potentially, but you need
to find the right investor, the investor that you can work with. And when it goes south, when there is a difficult period or a year, and you need to be sure that investor is not suddenly like just a pain working with and reporting to, and suddenly figures are not looking as good as you projected them. So you need to get the right investors on board. After we often talk with these companies about, don't think about the owner group, and as founders, you are part of the owner group. So you are inviting other owners to your group. That's what you're doing. So you need to be able to work with these other owners as an owner of your company, and you also, of course, need their capital and finances to reach the point. And the most important point here is when you reach the point of some kind of cash flow positive, then suddenly, until that point, you are dependent on the investors. If money runs out, you need to go to them because you won't get a bank loan, you won't get any other funding. So make sure that you have investors on board that you have a good relation with. And we, as investors, do their due diligence on companies. We also strongly recommend and try to get all our companies, do your due diligence on the investors as well. What other companies have they invested in? Talk to some of the founders. How that collaboration worked. Okay, they're saying they can help us to open doors to get new businesses. Did they say that to you too? Did they actually do it? So that you are choosing the right people. But of course, sometimes you need to take the money because that's really the situation you are in. But try to also get the right people on board.
But I can just imagine also that take in an investor, and if that investor is focusing on the return on investment, obviously he's investing in a company, and obviously the whole concept of doing that is that he wants a return on his investment with a multiplier in. But if you have that mindset only as an investor, obviously that's your end goal. But I guess that whether you then have meetings with the ones that you invested in, I'm not sure this happens, but that might be a stress, because you need to conduct and drive your company based on your idea and your concept. and as you said, to see the investor as a part of that journey rather than someone that put in some money and then wants to have a return on his investment. Because I guess that's just, at least from my point of view, if I would run a startup and I got some money, and that the guy that sent me the money is then just constantly, asking for, his, when will we go break even? When will we, when will we show profit? And just calculating, I invested 4 million. Within 4 years, I want to have 16 million. But it's not a question in this, but it's just, I can just imagine that might be a challenge for.
I think you can have in the early stages. Quite often, it's a mix of it. It's a group of investors that might win. And if one of those are more passive, just doing it more like a financial investment, that might be okay. If it's a like a good person, so it's not someone shady. But I think at these early stages, you need so much more than just the capital. And getting the right person inside, let's say it's an industry insider who's had a great executive career and now is investing in you, and you're targeting that same industry. Actually, those contacts might be worth much, much more than whatever money he invested in the beginning. And so it's getting the right people and the people who can support your business. Of course, financially, it's very. That's the base. But also have something else that they can input, because you will need more than just the money. Otherwise, the money will typically the money invested runs out, and the investor stays still on board as a owner, or part owner. So I think that's important to make sure that also that journey is as well, and that they can continue to provide value.
I understand. So I guess you answered the another question that I had, but I will put it. I will ask it anyway. And I know that you will say that it depends on the business, but
I might not.
But so with that said, what would then, if you conclude, what's good investor? Is there? If you can express what's a good investor, and we can then talk about what is a sort of the counterpart, and what would be a good startup. When would you say that this is a really good match? When those two things meet, big things will happen, or potentially has a better chance to happen, to succeed then as a company.
Of course, there's a lot of different components, but I think one important thing is that you as a founder and the investor, that you can share and agree on the same goal with the company, that you want to do the same. That we are in 5 to 10 years. This is what we would like this company to be, and that's a long journey.
Yes,
and there will be ups and there will be downs. But as long as you've agreed on this is what we want to do with it, and the different parameters that includes product or market or size of company or whatever it could be. But as long as you have some common understanding on the direction and where you want to go, you will have an easier time to go through the tough times. Because when everything is fine and well, and you're invoicing more this month than you invoiced last month, of course, not everyone will be happy. But it will not only be those moments. It will also be tougher moments where things didn't work out as expected. The big contracts you've been working for half a year, it's kind of doesn't happen. Someone new coming. So I would say that's and also that there is a openness, so you can have a fruitful, valuable discussion. So that as a founder, that does not only come with the investors, but the investors can be a good advisor if it's the right person. For whatever it can be for the industry, it could be organizing the company, getting like what we say in Swedish, ordning och reda.
Yes.
If that's important for your company, it might be perfect to have someone who knows that. So that the investor should be able to provide more value than just the capital. I think that's the ideal. Perhaps not all investors, but at least a couple of the investors in your initial external investigation.
Do the startup company then need to adjust because I guess when you are an entrepreneur, you have a very strong belief in whatever innovation or company or idea that you have. And then just imagine that, this very senior investor comes in and puts a lot of things to the company, insights to the company, and can support that startup. But if those insights might collide with the concept of the entrepreneurs, I'm not sure whether that happens, but I guess. So the question would be, should you should you hold on to your sort of general vision, or do you need to be able to adjust, or how much would you need to be able to adjust? Because at some point, I'm just guessing that someone comes in and starting to be a really involved as an investor, and then with the seniority, and then tries to shift. So the whole concept would be changed. That doesn't really mean, it doesn't really, when you look at it 1 year after, this is not what, I was expecting as a founder of the company. This was my concept. This was the goal. But now we have been pushed towards I
would say as a founder or a founding team, it is in anything perhaps, but the financial part, it's your company.
Yeah.
So I think you should not do that into oblivion.
No.
By being, as long as you're open and take in other ideas and so forth, but you got this ship in motion.
Yeah.
And if you still feel that this is the direction we should be taking, not because you're hanging on to your old darlings. So perhaps sometimes you have to kill your darlings. That's fine. But I think the founders are the ones the investor will not drive the company. So no. The founders have to drive the company.
Yeah.
The investors can support the founders in driving and growing the companies. So that should be
maybe it would be sort of a good investor will not push.
If you choose the right investor and you did your due diligence and you feel that, okay, this is the right person that will help us in the right way. Of course, sometimes you make mistakes, of course, and that can be both expensive and hard on your company. But there is no avoiding that. But try to think about bringing in the investors as more than just getting money in your bank account.
Yeah, and you said that before, and I think that would be my conclusion as well. That do not only follow the money, because the money's out there. You will, there's always someone with money, but get the right one that have money and also can support your growth and your startup.
Yeah,
great. My final question, and this is really the $1 million question to you, Hannes.
Oh, $1 million. Will I get $1 million?
I know that, our listeners are working within the field of innovation, tech, and product. They might be entrepreneurs, but they also might, be sitting at a company providing their insights to a company. But I know that we have a lot of people listening to our podcast that has ideas and that has, I think that has the mindset of, I want to, go from taking an idea to become a startup and then a scale up, etc. But do you have any sort of general small advices for our listeners that has those ideas, but how would you, get started from this napkin idea and taking the next step? Because obviously I have a lot of ideas. I've been thinking, this is a great, I would do this and this and this, but but how would I and our listeners take that napkin idea to at least formalize it, to be able to at least take the second step of eventually starting their own company or going from an idea to at least to become a startup? There's several steps. I understand that, but I wouldn't come if I come with a napkin with you. You would like, okay, great, Pontus, let's get a beer. But it ends here because this is just a napkin idea. You need to. So what would you be?
Yeah, perhaps having a beer, but not with me.
No,
but with someone else that you can recruit as a co-founder would be the best.
Yeah,
it would be, because I think that's of the things that we most often tell the companies we meet, and that either we'll be working with them or we will not be working with them for different reasons. Is number actually get a co-founder, and this can be, especially if you're like an idea person, it can feel difficult to share your idea and to get, but the idea will get better.
Yeah,
your company will get, or your company that you will start will get stronger. Of course, you will have much easier to get investors. That's another issue. But also doing a startup and the entrepreneur journey, it's tough.
Yes.
So if you're on your own, it's super easy that you just get overworked. And then if you can't put up, if you're two people, you can do that together. And that's actually a big thing. That's one of the main reasons why investors rarely invest in single founder companies. Because if this person taking on all the heat from the market, from product, whatever, just hits the wall.
Yeah.
So that's, I would say, get a co-founder really, really early on. It could be that napkin, beer, and actually it's a little bit like getting an investor on board, because you have the initial idea. Sell it. You need to sell it in, and this is someone that will start and join the company is with the same kind of circumstances or that you. And I think secondly, also be very generous with your co-founders. So don't be the guy.
Don't give 1% of the company.
Exactly.
Substantial.
You're in for a marathon.
Yeah.
And you haven't even left Stockholm Stadium.
No, exactly.
You've run a couple of 100 meters.
Yeah.
You still have 42,000 meters to go, and you will go that together. So be generous. I would say you don't see that often, but I would say split it evenly.
Yeah.
If you're three founders.
Yeah.
1/3 each.
Yeah.
That's your initial idea. It's great, but that's not what will create value in the long term.
No, I understand that.
So that's so linked to that. Second advice or insight would be fall in love with the execution and fall less in love with the idea.
Yeah. So transform from holding on, or that, as you said, you love your idea, and then you,
because it might be tough to hear, but your idea, there is probably quite a few people who have more or less the same idea, and there is, I can tell you from all the incoming emails, messages, phone calls, etc., there is no lack of ideas out there.
No,
there are so many ideas. Some are great.
Yes,
some are really great. There is a definite lack of execution capability. People who can actually execute on this idea and create value for customers, for users, for society. Yeah. So I think pretty early on, start to fall in love with the execution and not just the initial idea that you had that's so great.
No,
how do we actually get this? How do we get this working? How do we get it out to customers? How does this work in reality? What do we have to change? What do we have to shift? So fall in love with the execution.
A great idea.
Fall less in love with the idea, or be able to let your idea go, kill your darlings.
Yeah.
And then as like a third one, which we see quite often, is don't be afraid of sales. Especially early on. There's a little bit different types of, but sometimes you have founders who come from the more creative, or it could be the research side, and perhaps it's not their competence is not within sales.
No,
that's fine. That's just, that's the way it is.
Yes,
but it doesn't mean that you don't have to try to learn it.
No,
and if you are clever enough to figure out complicated physics simulation, whatever, you are clever enough to get an idea of what you need to do with sales.
Yeah.
So even if you bring on someone from the outside, you are, as founder, you're still in charge. This is the sales strategy.
Yeah.
That's not something you don't ask someone external to make our sales strategy for this product.
No, you need to be involved in that, and you don't do it as 5 minutes to 12. I mean, you should then take on that journey.
You should have that. Yeah. You should have that. Sales strategy should be like in the first meetings you have. How do we get this out? In the initial, perhaps you're not even selling it, but
No.
you are getting it out to the customers so that they actually can use it. So it's some value is created.
Cool. So find a co-founder and be generous with your stake, and don't forget about sales. Thank you, Hannes. Super kind and super nice to have you here. And
it was awesome to be here.
Thank you.
Great questions and great discussion.
You've been listening to an episode of a Roaring podcast by Roaring.io. If you liked it, share it with a friend or a colleague. We would also love to stay connected with you. Please feel free to subscribe to the show. Thanks for listening and see you next time.